Good afternoon, fellow cryptocurrency traders. Today we're going to talk about the MACD, also known as the Moving Average Convergence Divergence Indicator, the MACD. Now this indicator is very helpful in predicting short-term turning points. You can also use it to get in, find a good buy point, and also where to exit. I'm going to explain all that in just a moment. Now, what is the MACD? It's an indicator that's based on the moving average indicator, more specifically the exponential moving average, also known as the EMA. Now the MACD was created by Gerald Appel to provide vital information on price action. The most common parameters used in the MACD indicator are 12, 26, and 9. Now when you download the MACD, the standard indicator from TradingView, that's what you're going to see as the default is 12, 26, 9, and then close. Now, what's the MACD used for? First of all, it's used to warn of potential change in price momentum. And it's also used to time your entry and your exit, to a better point. So, how to get the MACD line? Well, the MACD line, which is the blue line right here, the blue line is calculated by an EMA of 12 periods, or 12 candles, minus an EMA of 26 candles, or 26 periods. Now, to you, that probably doesn't mean a lot, but to people who want to know what it means and how it's calculated, probably means a lot. But anyway, I just use the blue line and the orange line. Now, the signal line, which is the orange line, that line is calculated by an EMA of 9 of the MACD line. So again, the MACD line is made by an EMA of 12 minus 26, both EMAs, and the signal line is made of an EMA of 9 periods of the MACD line. So, the EMA is purple, while the EMA 12 is pink. The EMA 26 is purple and the EMA 12 is pink. The MACD line is blue and the signal line is orange, kind of a burnt orange, I would say. But anyway, if you want to get specific. Now when the MACD line is positive, greater than 0, which is also called baseline, then that tells you the market participants value the asset more in the recent 12 periods compared to the past 26 periods. So in this case, it would be, once it starts to turn green, the oscillators, and it's above baseline, then you're looking at a bullish situation for that particular asset. Now, the MACD histogram equals the MACD line minus the signal line. The histogram here is the difference between the MACD line and the signal line. When it's positive, greater than 0, you have bullish momentum, and below the baseline is, of course, bearish momentum. Now, the MACD tells you the direction of the price momentum. When the MACD line rises above the signal line, the histogram is going to turn green. There are situations where the histogram is going to be red. When it's red, it faces down slightly below the baseline. It's kind of hard to see here because it's so minimal, but sometimes you get a little bit mixed signals, especially when these two lines converge upon one another. So it really doesn't, it just means it's a period of consolidation, or not much price movement, and really nothing's happening here except it's getting ready to do something positive. Now, after seeing green histogram bars appearing, check the EMAs. Wait for a bullish crossover, which is right here, blue line crossing over orange line, and always moving up. And this crossover tells you that the momentum is bullish and you're going to start making some money. That's also when the MACD line in blue will be in positive territory, confirming the trend. Now, the biggest point of all is when you are looking at the bullish crossover, which is right here, blue line up over orange line. This is a good entry point right here. The place where you can really see it appear is probably on this candle or this candle. And also, when you have more of a spread between the blue line and the signal line down below, that means you have more bullish momentum. You see how it gets wider here? And you see the candles are getting taller and it's moving faster. That means increased momentum. Now at this period here, you have a little bit of a waver, which is shown by the candle activity, but it doesn't cross back over. You're still good to stay in the trade. You got a little peak here, it's shown by these two tall candles, and then you have a matching red candle, and this is probably what I would call the rollover point right here. When the MACD line starts to roll over and crest, just like the crest of a wave, then you have the start of a bearish crossover. So again, just about right here would be the peak, probably a good sell point, but if you wanted to wait until you had the crossover, that's okay too, because it's always better to be certain, because sometimes these lines can actually get closer and then have a peak, and then even get closer a second time without crossing over, and then have another peak. But like I said, right in here is the peak, and this is where it's crossing over, or rolling over, I should say. Now this is the true bearish cross right here. Heading a little bit downward, orange line over blue line. That's the true point where you would definitely want to exit this trade on the 4-hour. So, and you can also see when you have the rollover period right here, you can see that the candle, not the candle, the oscillator height is diminishing. And when you have really nothing going on here, that means it's probably going to turn red very soon. So right in there is kind of a period of uncertainty followed by the bearish crossover. Well, that is pretty much all we have on the MACD, and I hope this helps you find better entries and better exits. And stay tuned for another analytical video based on indicators, and I'll see you next time. Take care.